Good evening, everyone, and welcome. I'm Divya Gopalakrishnan, and on behalf of CareEdge, I welcome you to our today's discussion on Can India strengthen its steel industry amid global uncertainty? We sincerely appreciate your time in joining us for this webinar. We would like to welcome our esteemed guest speakers for today, Mr. Ravishankar Jayaraman, Senior Vice President, Finance, JSW Steel Limited, and Mr. Ravi Ranjan, Chief Operating Officer, Shyam Metalics and Energy Limited. This session will be moderated by Pulkit Agarwal, Director, CareEdge Ratings. We will commence this session with a presentation by Hitesh Avachat, Associate Director, CareEdge Ratings. This will be followed by a panel discussion and a Q&A session. In case of queries, participants are requested to key in their panel. We will request you to hold up your queries till the panel discussion and take up your queries during the same. Now, may I invite Hitesh to make his presentation, please?
Thanks, Divya. Thanks for your opening remark. Once again, I would like to thank and welcome you all and our esteemed panel members. Thank you for your participation and interest in today's webinar, and certainly looking forward for questions in the chat box for the Q&A session. In today's presentation, we will be covering a brief scenario specifically on the global and domestic steel industry. What are the structural changes which are emanating, which continue to impact the industry, be it on the profitability front or the demand supply situation, or for that instance, even on the method of production as well. So in a way, if we have to start in terms of our presentation, we are first looking at the global steel industry perspective. So currently we are looking at the global steel industry. It has been navigating from several challenges on multiple fronts, be it issues like facing decarbonization, environmental concern, technological advancement, geopolitical issues, and the changing trade dynamics for sure in terms of the increasing geopolitical situation. Last but not the least, what we are also seeing is a kind of a slowdown in demand, which is leading to an excess capacity situation. Having said that, there are opportunities which have also raised up specifically for the global steel industry, or be it certain players, whether it is the China or the Indian steel market. So to start with, let us have a view in terms of what is how the overall global steel industry currently is looking at. So here we are trying to show how the per capita steel consumption has actually moved. If we look at the per capita consumption of the world or the major steel consuming countries, it has shown significant shift in pattern. I mean, countries like US and Japan over the last 2 decades has shown a consistent decline in per capita consumption, more so since 2015. While China and India are the only seen showing positive growth, the situation for China has again shifted since 2019. In a nutshell, what we are looking at is a consistent decline, specifically in the per capita steel consumption pattern for majority of the large steel consuming countries. Now, having said that, I mean, however, despite of these kind of contraction in demand, specifically on the per capita consumption front, despite having concerns on the demand side, what we have seen is a consistent rise in global steel capacity. I mean, this is despite of the fact that the Chinese steel industry now for over several years have been trying to take measures in terms of arresting the capacity increase. If you look at the existing steel capacity globally, it has now reached close to 2,500 million ton. Even if you look at the post-COVID era, it has still shown an improvement or increase of close to 70 million ton. So there is a consistent pattern of net increase in steel capacity globally. Having said that, what has happened is the current utilization rates are still above 75%. So there is some respite in terms of the demand supply situation. However, this has led to an increase in idle capacity globally. So in our next slide, if you look at how there has been a shift, we are trying to understand a 5-year block of increase in steel capacity vis-a-vis increase in steel demand. So this trend clearly showcases the reversal of capacity increasing from more than what is the increase in the demand. So This has specifically happened in CY23. Earlier, it was more or less the same. The capacity was always an overhang. But after a dull period, after a period of close to last 5 to 6 years, the gap between demand and capacity had slowly, gradually gone down. But again, what we are seeing currently in CY23 is a slight reversal, specifically on the capacity to demand situation. So, how much would be this overcapacity situation globally? To understand that, I mean, just to look into our next slide, if you look at the absolute overcapacity number, it is close to around 640 million tons. So wherein we are saying what is the idle capacity, it will be basically capacity minus what the annual consumption globally is happening. So at a 2,500 million ton of a capacity, we are currently consuming only around 1,900 million ton. So a kind of an overhang of close to 600 million ton. So having said that, I mean, if we try to look at this scenario, this means that the idle capacity has again started moving up. Though if we are assuming a capacity utilization rate of close to 75%, then the rate will be still okay in terms of a marginal surplus of around 1%, wherein we are producing more as compared to what are the consumption level. But the moment these capacities ramp up and the utilization rate increases, there will be surely a build-up of surplus position in the global demand supply situation. So having a look at how the global demand supply is panning out, let us try to focus on certain key markets, specifically China and USA, how things are panning out in both of these economies. So China continues to remain very uncertain. Although China is throwing signs of improvement continuously, signs of improvement, it continues to remain uncertain. We have observed that in the last decade, and especially post-COVID, the surplus situation in China has kept on increasing, which possibly means surge in exports. So the surplus situation, which was close to around 16, 17 million ton at around CY20 numbers, has now moved up gradually to 96 million ton. This is the same level what we have seen in 2015, 2016, wherein we are seeing probably a lot of let's say cheap imports which have been dumped into majority of the Asian economies. So that's how the situation is, and we are now hovering around 100 million tons of a surplus in China. So having said that, I mean, if you look at the recent trend, the Chinese monthly exports are surely showing an increasing trend in the last 3 to 4 years. Specifically, if we look from June 2023 onwards, now this surplus has actually moved up by 2 to 3 million ton. So that's how the scenario is for the Chinese steel industry. And why this is happening is because of a very bleak kind of a demand outlook, specifically in the Chinese market. And the reason for this is the reason behind the same in the current state of the real estate and construction sector, which accounts for close to around 55% of the end-use steel consumption for China. So if you look at the Chinese floor space index, in terms of the construction index, it has actually slowed down drastically. This has always been in higher double digits over the past few years. But if you look at the trend for the last 2 to 3 years, it has actually gone negative, not just staying stable, but it has actually gone negative. So same if we look at the US steel industry, although US has always been a net importer of steel, the kind of imports which US had earlier factors of close to 25 to 30 million ton, that has now narrowed down to 19 to 20 million ton. Now that is also majorly because of the decline in demand, specifically in the US market as well. So what we have seen in the US market, specifically on the demand front, is if you look at the housing situation, the overall housing sales, whether it is the new home sales or whether it is the existing home sale, post the stimulus packages, it has shown improvement. But more or less now the trend is actually moving on a downward side. So post the stimulus support at different point in times, specifically by the government, there was a recovery which was being seen in the housing market. However, the recent trend indicates a very lackluster sales, specifically for the new homes segment. Uh, Having said that, I mean, let us shift our focus in terms of how the realization and cost and profitability has moved specifically at the global and the domestic front. So if we look at the here, if we look at the kind of historical chart showing the kind of how the steel prices have over a decade, kind of the trend analysis for steel prices, uh, there has been a significant decline in steel prices, which we have seen specifically in the past few months. However, what we can see is they continue to hover around the long-term averages, which is to a certain extent a kind of a soothing thing. But what is exactly concerning in terms of the relative trend in the key raw material prices? So as far as the correction in steel prices is concerned, it should not be a problem. But if the same concern or if the same decline in steel prices is also witnessed in raw material prices, then probably we are not having much of an impact. Although India is not concerned so much in terms of iron ore prices, but if we look at the volatility in coking coal prices, that has surely shown significant kind of a movement. Uh, Here we are trying to look at the movement in spreads between the key raw material prices and the steel realizations. If we look at the right side of the chart, we can see the margins have corrected significantly. Uh, Definitely, they have peaked in FY22, but currently the spread will be close to around US dollar 200 per ton. Now, majority of this movement has actually been specifically because of the coking coal prices. Here the iron ore and coking coal prices are considered in the input output norm. So in terms of understanding the actual spread in terms of realizations and the key raw material prices. So what has been the impact specifically on the balance sheet and P&L side? Surely this volatile has a sharper impact specifically on the balance sheet and the P&L side. If you look at the coverage ratios, there has been they have been at comfortable level above 3x in the last let's say couple of years. But having said that, if you look at the total debt to EBITDA movement, that has actually been on slightly on a higher side, specifically because of the continued capex activity which is happening. Just to enlighten just to enlighten in terms of how we have tried to analyze this, is we are looking at an industry aggregate which is representing close to 55 to 60% of the domestic steel capacity, and that is where the average industry aggregate is coming out. On the right hand side, if you look at the EBITDA per ton movement, that clearly shows the indications in volatility in raw material prices, which is usually impacting the EBITDA per ton for many of these players. Whether it is the integrated steel players or whether it is the secondary producers, they will continue to get impacted because of the sharper movement in the raw material prices. Coming on to our India story, India has showcased a robust performance over the last 3 years. Uh, Specifically, if you look at the kind of demand growth, growing comfortably in almost double digits. More so, I will say the growth has been consistent across finished steel products, whether it is flats or longs. On the alloy side as well, we are seeing a much stronger growth, which is also on account of specifically the requirements from the infrastructure and the capital goods segment, which is actually driving the growth for the alloy steel segment as well. So in a way, what we are looking at is across the segment, across the product growth, be it long steel or the flat steel, there has been a consistency of growth specifically in the domestic market. So, if we need to understand what is coming ahead, India is rather showing a kind of a disciplined approach, specifically when it comes to steel capacity addition. The steel capacity expansion plan are actually in line largely with the movement in domestic demand. we are seeing a scenario of almost doubling of capacity from around 90 million ton in FY12 to around 186 million ton in FY27. So here what we are trying to understand is the confirmed capacity which is likely to come up, which according to our understanding will be close to around 186 million ton by end of FY27. Currently, the Indian steel capacity is hovering around 158 to 160 million ton. Um, but here, the major thing which we need to understand is whether we can really achieve the much talked about number of achieving 300 million tons by 2030. The answer will be surely slightly different. Maybe at best, India can top up another 30 to 35 million ton on the existing number of 185 million ton. Which is basically basis the kind of announcement and the kind of capex activity which are getting undertaken by majority of the steel producers, and to a certain extent a large part of this capex activity will be actually countered by the large integrated steel producers. Undoubtedly, we have also seen in the last one decade that the contribution of the secondary steel players have also equally been supportive in the capex expansion what has happened in the Indian market. But having said that, I mean, if we are looking at the demand supply situation, we are producing what we are consuming in terms of the volumes. But in terms of variety, probably what we see specifically from the import export trend, India has again turned a net importer of steel in FY24. There has been a kind of a decline in global steel prices, and also if we look at the overall economic global steel industry situation, that is also supportive in terms of surplus steel which is there present, and India being growing at a double-digit growth is actually attracting a lot of steel imports as well. But having said that, there is still a gap in terms of specifically in terms of value-added steel products which are manufactured currently are not that sufficient to cater to the entire demand situation specifically in the domestic market. So while on the crude steel we are in line in terms of how the demand is moving, the capacity are coming up, but specifically we are still on the way of kind of achieving the specifically the production lines specifically on the value-added steel products. So currently what we are seeing is a net importer of steel in FY24. So when we try to look at how the composition of imports have been over a period of time, what we have also observed is the significant contribution of alloy steel products, specifically in our imports basket. So that has consistently remained close to 30%. Whatever is India importing, around 30% of it has been contributed by the alloy steel producers. Surely many of the companies on their own or through JVs or through joint ventures with international companies are building up this activity, but there is much more kind of a time frame which we have already spent, and having done that as well, we are still seeing almost 30% contribution in imports through alloy steel products. There can also be one fact that majority of the alloy steel, which would be specifically the stainless steel category, or I would say larger, specifically the low grade stainless steel category, which is also one of the key large components which are getting imported currently, if you look at the Indian import basket. But having said that, I mean, we have to look at in terms of how we are, let's say, engaging in trying to focus what value added products are actually required and how we are trying to cater to that production levels. Coming on to the outlook section, I mean, what we have tried to understand is world HRC prices would be hovering close to around $525-$60 per ton. This is basis our assumption that iron ore will be maintained at $110, and coking coal we had factored close to around 180 to $240. Currently, if you look at coking coal prices, they continue to remain volatile in between 250 to $80. So that is a concerning part, specifically on the profitability front. If this range breaches on the higher side, probably we'll see major impact, more impact on the profitability, specifically on the domestic steel players. Having said that, as far as the demand outlook for the Indian basket is concerned, it has continued to remain robust. Earlier we were anticipating a demand growth of 7.5 to 8%, which has now we have again revised it close to around 8.5 to 9%, and we are seeing this 9% growth, the CAGR growth over the next 3 to 4 years. If we look at FY25 as a year, probably the number would be still be in double digit as far as the domestic demand is concerned. As far as the global demand is concerned, we don't see much of a change. Yes, China has showcased better months specifically, but overall the demand outlook globally remains continues to remain slightly moderate. So coming on to how has been the movement specifically on the rating side, in terms of the credit outlook for the sector, around more than 60% of the industry capacity is actually being rated by CareEdge Rating, which includes all the top 5 integrated steel producer. So if you look at a double A band for companies, if you look at the groups, there are 10 large groups which fall in the double A and A band, which accounts for close to 30% of the CareEdge Rating portfolio. Around 30% of the portfolio actually falls below the investment grade category. I mean, this will be the BIG grade, will be largely will be rolling mills or specifically standalone producers, whether it is the sponge iron manufacturers or something. But overall, as far as the let's say the credit side for the sector is concerned, our outlook for the sector remains stable. And this is how the dispersion as on date is there for the entire portfolio of Care Ratings. With this, I would like to end my presentation here. Over to you, Divya, specifically.
Thank you, Hitesh. As mentioned earlier, all attendees are requested to key in their questions, which we will take up during our panel discussion. Now, may I invite Pulkit Agarwal to take over the session, please. Pulkit Agarwal is a director with CareEdge Ratings and is qualified as a chartered accountant and an MBA. With over 18 years of experience in corporate ratings and in CareEdge Ratings, he has led various teams across diverse sectors. Over to you, Mr. Pulkit.
Thank you, Divya. Good afternoon, everyone. Now it's time to seek opinion from the experts in the field. Before we start our panel discussion, let me introduce our esteemed guest panel members for today. Our first panel member is Mr. Ravishankar Jayaraman. Mr. Ravishankar Jayaraman is Senior Vice President Finance, JSW Steel Limited. Mr. Ravishankar has over 30 years of rich experience in various aspects of finance function with corporate and project finance, financial strategy and structuring, mergers and acquisitions, joint ventures and strategic alliances, business re-engineering, etc. At JSW Steel, Mr. Ravishankar is presently responsible for the project finance and corporate finance for the steel business. Prior to his joining JSW Steel, he has held varied leadership positions in a large Indian steel producer. He is a commerce graduate from Mumbai University, a qualified chartered accountant, a qualified cost accountant, and has a postgraduate degree in management. Very warm welcome, Mr. Jayaraman.
Good afternoon. Thank you.
Our second panel member for today is Mr. Ravi Ranjan. Mr. Ravi Ranjan is Chief Operating Officer of Shyam Metalics and Energy Limited. He has rich experience of over 27 years in steel manufacturing, quality assurance, strategic management, productivity enhancement, and process improvement. Prior to joining Shyam Metalics, he has worked with Tata Steel Limited and Vedanta ESL Steels Limited. He has done BSc Metallurgical Engineering from National Institute of Technology, Jamshedpur, and PGDBM from XLRI Jamshedpur. A very warm welcome, Mr. Ranjan.
Very good afternoon and thank you. Okay.
So let me start today's discussion with Mr. Jayaraman. In the domestic market, JSW Steel is not just largest, but has recorded one of the fastest growth, be it in capacity expansion or sales volume. You are now almost selling close to 25 million tons annually and continue to have significant expansion plans going forward as well. So what, according to you, would be the strategy of Indian steel producers in terms of capacity expansion going forward, especially in light of increased imports? So we'd like to understand your views on capex and expansion plans of Indian steel industry, Mr. Jayaraman.
Thanks, Pulkit. I would like to start with what has happened in the immediate past. In the last 2 years, we have seen the FY24, where the steel consumption in India has grown at 13.6% and to 136 million tons. And with FY23, the previous year, we had seen a growth in steel consumption by 13.4%. So this is a very strong growth by any numbers. Historically, also, we have never seen this sort of a growth in a consistent basis. And the initial data, what we have seen for the month of April and May, also suggests that in the last 2 months, first 2 months of the current financial year, the steel consumption has grown by around 12% in the current year also. Considering the strong focus of the government of India for and aspiration to reach to Viksit Bharat by 2047, we have seen a very strong growth in the capital expenditure by the governments. We seen from, in 2020, we saw the number was 3.4 lakh crores and it grew to 27.4 lakh crores by 23 and 9.5 lakh crores in 24. And the budget for interim budget for current year talks of 11.1 lakh crores. These are big numbers. And if we were to achieve the building blocks for Viksit Bharat, then infrastructure would be a key focus area, will continue to be a key focus area of the government in terms of capital expenditure. Roads, railways, housing, high-speed rail, metros. These are seen, you will see metros, you've seen in 27 cities in the country, we are seeing metros getting developed. So these are all good for the steel industry and creates a demand. And we are just about to see a private investment take off. It's not something which is not done well so far. So we see a good potential for growth in the demand for steel in India. If you see the numbers of the National Steel Policy formulated in 2017, it talks of by 2031 capacity of 300 million tons and Indian consumption of 230 million tons. How achievable these numbers are? If we were to just see the number of 136 million tons in FY24, if we were to compound it at 8% per annum over the next 7 years, we should be reaching 233 million tons. So are these achievable numbers? It's your guess. The second thing is the National Steel Policy talks of a multiplier effect on of the GDP to the steel demand of 1.4x. So that means if India grows at a 6.5% GDP over the next 7 years consistently, and the multiplier effect on steel consumption would be 1.4x. So we will be ending up 8% growth in steel for the thing. So the question is 6.5% growth achievable over India for the next 7 years? If the answer is yes, then I think there is a very, very strong potential for steel in the coming years. Just to look at the numbers, if we against 1.4x multiplier, which we have, as per the National Steel Policy, the numbers for FY24, the year went by, where the steel growth has been 13.65% as against the GDP growth of around 8%, 8.2%. So it is a multiplier effect is 1.7x. So, prima facie, the numbers look achievable from where we are in terms of the aspirations of the government, and we believe that actions will follow to achieve these objectives. So, we see a good potential for growth for steel in India. While we can address the elephant in the room, that is China, and the other factors, what we need to look at is historically, how have other countries grown and how they have added their steel capacity. So we had a very interesting analysis of the data of in the last 75 years, three major countries have shown very substantial growth in a short period of time. In terms of Japan, between 1950s to 1980, Korea between 80 to 2000, and China between 2000 to 2020. One thing which comes out is when, you can see, which is consistently pattern which is being seen, is once the per capita income, per capita consumption of steel in all these three economies reached close to 100 kgs per capita, then there has been the 20 years or 30 years period, the demand has shown a hockey stick growth. We saw Japan in 1960 was close, it's very, very substantial CAGR of 14% over 20 years. Korea between 60 to 80. In Korea, we saw between 1980 to 2000, a 13% CAGR. And China between 2000 to 2020, a CAGR of 11% in terms of consumption. So these are all big numbers. And incidentally, if you look at the per capita consumption in India in 2024, FY year 2024 is 97 kg. So we are at I would say, the cusp of excellence, and we can look forward to a hockey stick, which will be very good for the industry. So the second aspect is how have these industry grown? Have they banked on that capacity, or have they resorted to imports to do that? We saw during all the three countries, Japan and Korea were not endowed with any raw materials for the steel industry, but they still added substantial capacity during this growth phase to cater to their, the nation building phase, as we can call it. Same thing in China, we saw a very, very substantial growth. China at one point, just not far in the future, was at par with India in terms of capacity around 30 years back. Then we saw a huge hockey stick increase in capacity to achieve this growth, which has been seen. And China today is almost 50% of the global capacity consumption and so. So we see a good opportunity if India's steel consumption were to grow this substantially. The Indian steel industry has to gear up to meet the demand. And we've seen for the first time India being a net importer of steel last year, where we had a net import of close to 1.1 million metric tons. So if the Indian steel industry were not to grow, we would see that the market will be taken away by imports. And can India really afford to give away this lucrative market to imports when we have a capacity in terms of technological capacity? India has a very rich heritage of steel production, and it has the raw materials. The key raw material iron ore is available abundantly in India, unlike Japan or Korea and China, which imports substantially the whole big chunk of the materials. And we have the technical manpower, we have the labor and substantial advantages, and there is a demand. So with all the right ingredients, should we, as an Indian nation and the steel producers, ignore this opportunity to grow? And should we, look at the balance sheet? That's a big question which we say. So the what we see is the Indian steel producers have fairly strong balance sheets and have the capability to implement such projects to cater to the demand. And I think we are seeing most of the steel players, taking action to. There is enough room for everybody to grow, And most of the steel producers have recognized this opportunity and have established their plans to set up additional capacity. Coming to the elephant in the room, or can we call it the dragon? China, we all know, has faced the problems in the last year and so on in terms of their housing and other areas where their demand has decreased substantially. But we have seen an impact. What is the really the impact in terms of volumes? We have seen the volumes of exports by China grow from around 60 million tons per annum, which was seen at the past, to grow to around 90 million tons in calendar year 23. And we see in the first quarter, we are seeing a run rate of first 5 months, rather, up to May, we are seeing a run rate of 108 million tons annualized from China. So it is definitely a matter of this thing, but we believe that any such dumping or additional inflows from China will be which will affect the industry or cause injury to the industry, will be adequately dealt with by the government of India, and see that it is the domestic industry is kept healthy. China imports a substantial portion of its iron ore and coking coal, so it cannot sustain, and the cost of production of steel is higher than in India. So it cannot sustain dumping without injuring itself and incurring huge losses. So it is not maybe a short-term phenomena could be visible for a few months or few quarters, but I don't see that could be a very substantial issue to deter Indian steel producers to add capacity to cater to the growing market.
Right, Mr. Jayaraman. Now let me bring in Mr. Ranjan here. Mr. Ranjan, your company is not just expanding in carbon steel, but also expanding in alloy steel capacity. If we look at the composition of steel import, share of alloy steel products has increased significantly. Is the domestic steel industry completely capable to manufacture all grades of alloy steel productions which are consumed in the Indian market, or there are some segments where the industry lacks capability? And how do you see the future of alloy steel and downstream product capacity in India panning out?
Yeah, thanks, Mr. Pulkit. I hope I'm audible.
Yes,
Yes,
sir, you
sir.
are audible. Yeah.
Okay, so first of all, let me tell you this alloy steel import, which accounts for almost 30% in overall import quantity in India. This alloy steel includes not only SS but also the high tensile grade steel and interstitial carbon-free IF steel also. So all in all, yes, the answer is yes. We are capable of making all kinds of grades, whether it is SS304 or whether it is SS300, and in high alloy steel, especially in SS steel, the major quantity of raw material is in-house production of Shyam Metalics group. So it is a kind of vertical integration where the raw material availability can be converted into a value-added product. So yes, to answer your question, we are fully capable. And if you look at India, yes, in India also value-added products are actually increasing day by day, and with the help of PLI schemes, where the government is also supporting for 5 year down the lane funding and the incentives, where almost 1600 crores, or rather I would say MOU between 27 companies have been actually signed to produce value added steels. So in coming 5 years you will see I would say exponential growth in the value added products in India, where the government is also supporting. Yeah.
Right.
So specifically, I mean, if I have to come back specifically on the ferroalloy products, definitely India has a good level of capacity which has already come up, or even that is increasing. But on the key aspect specifically, if we look at, let's say, nickel or something, that again we are dependent on imports. So how do we address that? I mean,
Yeah, for the nickel, for the time being, yes, we are dependent on imports. However, if you look at ferrochrome, if you look at ferromanganese, if you look at low carbon ferromanganese and the niche grades in ferroalloy, we are fully capable, and we are one of the leading industry in India as far as ferroalloy industry is concerned.
right. Sir.
Yeah.
Thank you.
Right, sir. So let me come back to Mr. Jayaraman. Mr. Jayaraman, with the export duty which was imposed in 2022, India lost out opportunity in the exports market. So do we see that there is a scope for increase in India's export going forward, especially in the light of the uncertain Chinese situation? And in your view, how critical is the export market for the Indian steel producers as a whole?
Uh, India has been a large exporter of both iron ore as well as finished steel. And if you see at numbers, in terms of what is the volume of exports just happening, you take the exports have been in the region of FY24 was 9.65 million tons. And sorry, 8.54 million tons, and import was 9.65, sorry. And previous year was 8.34. So it's in the 8.5 million tons range. And if you were to compare the domestic consumption of 136, the exports constitute just around 6.25% of the consumption. So it is not India is predominantly a domestic production of steel, is predominantly domestic oriented. Exports have been happening, and JSW has been a large exporter in the past also and continues to be exporter. But it doesn't form a very significant portion of the overall production in the country. It's a small portion of this thing. It helps in diversification. It has some value-added products get exported, which is will definitely add to the stabilization of prices in the domestic market. It definitely, but it is not a essential main component of the sales mix of Indian producers. We have seen, of course, China increasing the volume of exports, as we discussed earlier, from 60 million tons to 90, and now a run rate of 108 million tons annualized run rate. So there is some additional volumes coming from China. That would be this thing we are seeing. Europe, some amount of flattening of demand. All these things are there, but these are, I would say, periodic factors which will keep happening, and it will not greatly affect, because all the capacities are being set up in India, not with the export focus, but primarily to cater to market, and the additional volumes or the surplus volumes are exported, which will neutralize, because once a new capacity comes in, there will be supply, which will there will be a lead and lag in the demand and supply. So that's generally how the buffer is used, exports as a buffer rather than a main source of the CV. There are no export-oriented units which have been set up predominantly focusing on exports. It's a domestic market predominantly, and exports have been, I would say, adding to the margin of comfort. So factors, temporary geopolitical and other factors do play a part, but these are all expected as fluctuations which keep happening over a period of time and not materially affect the growth plans of the steel industry.
Right.
So coming back to Mr. Ranjan, Mr. Ranjan, how do you see the market dynamics changing for the mid-sized players in the industry, especially when we are seeing increased imports, and also we may see some of the export volumes getting diverted into domestic market? Do you expect profitability of mid-sized players to get impacted because of this?
Yes. Market dynamics, especially the volatility in the raw material prices, do affect the profitability of mid-size companies. However, let me tell you, we safeguard ourselves with efficient, logistics, with the help of better raw material availability, and with the long-term contracting, and the consistency of the production, and with the help of all energy efficient processes. If we combine all these efficient processes, it is, yes, possible to overcome the challenges of the cyclicality and the volatility of the raw material prices, which actually poses a lot of challenges for the mid-sized companies.
Right, right, sir.
Yeah.
Mr. Jayaraman, green steel is a buzzword in the steel industry currently. So in your view, how viable is the usage of hydrogen in steel making, and what will be the impact on the cost of production because of it? And moreover, do you think that going forward, green steel can become a differentiating factor for the Indian steel industry?
I think there is no really definition for green
Definition.
steel.
Correct.
It's something, there are various definitions for green steel.
Yeah.
Coming straight to your issue of green hydrogen, that means using renewable energy to produce hydrogen molecules to use in the production. See, at this point of time, there is no established commercially viable green hydrogen producer who can, on a long-term basis. So the cost of production of green hydrogen today, as per our analysis, is much above the viability threshold. And there are some of the European countries have been extending governmental subsidies to set up the electric arc furnaces and other things, but green hydrogen and other things, but they are all not standalone viable, and unless the subsidies and other sorts of incentives are provided, and we don't have such a scheme for subsidies in India. And I think when a commercial organization cannot bank on subsidies to run business operations. So at this point of time, it is aspirational, this thing, where obviously steel is climate change is an important factor, and there is a lot of attention towards reducing the carbon intensity of the steel industry. What we have seen in the past in the renewable solar sector, or so, when there has been a lot of attention and focused research for reducing the cost, we saw the cost of the solar panels and the cost of solar power generation has come down substantially. We all recollect, solar power being over 15 rupees per kilowatt hour around few years back, and now it is much in the 2 rupee handle. So that has to be, obviously, with all these efforts towards building sustainable green hydrogen business being done, I'm sure there will be a technological breakthrough which will be able to produce green hydrogen at economical viable ratio. In the meantime, what steel producers have been doing is looking at, especially in JSW Steel, we have been looking at how we can use, if green hydrogen becomes available at economic value, are we really capable to use that in our process? So we are setting up a pilot plant to produce green hydrogen, a small 35,000 metric ton plant, of course, the largest in India of such plant. And this will help us to, we plan to establish this over the next year and a half or so. And this will help us to, get acclimatized to use green hydrogen in our process, in a blast furnace, in our DRI plants, so that as and when the technology becomes viable and we are in a position to use that process effectively in our operations. So this is the groundwork, but expectation is that this should evolve sooner than, and we could be able to reduce the carbon footprint. In the meantime, most of the steel producers, including JSW Steel, are looking at the best available technologies to reduce the carbon footprint. Reduce, some technologies have emerged wherein rich coke oven gas can be used as a substitute for coke in blast furnace. So these are technologies which are have seen some success in some parts of the world. This is being explored by this thing, so we can reduce the coke rate in the blast furnace. So these are some things which have been done, but a sizable, we call it to the extent of calling it as a green steel doesn't look, at this point of time, till 2030 looks, difficult. So the plans of most of the steel producers in the next 5-6 years are predominantly through the blast furnace in India.
Maybe by that time we'll have a common definition for green steel as well.
Hope so.
Right. Before we take up question from the attendees, I would like both the panelists to just give you their outlook on the steel industry and in their view, what would be the possible risk factors in the short to medium term period. Mr. Ranjan, if you can take up this question first.
Yeah. See, I would like to mention the biggest advantage of India so far is our demography. 8% age group of 15 to 64, the the portion where the consumption pattern will be decided by this group only, and this is the highest in the world, which is 68%. So the consumption phenomena is here to stay, and this will actually drive the consumption pattern, where it is also being supported by government. And I don't see any risk as of now, because the growth story has already begun, and you have already seen how our per capita consumption of steel is moving from a mere average of 55 to, let's say, 96 today, and in coming days by 2030 it has to reach at around 160. So when the per capita consumption story is going to move, then certainly the consumption pattern will also continue the same manner, and I don't see any risk in this as of now. Thank you.
Okay. Mr. Jayaraman, your view?
Yeah, we have all the right ingredients in place. We have a demand, as Mr. Ranjan rightly mentioned. We have a ready market, a growth potential. We have a young population. We have the capability to produce steel, and we have a long track record of producing steel. We have one of the key iron ore is the key resource for the steel making, which is available. And the balance sheets of the steel players are strong, and they are in a position to raise capital to set up. Steel being a very capital intensive project, a lot of capacity fundraising is required to meet this additional capacity. So the right ingredients are there. We need to manage, and the government is also focused on infrastructure spend and growing the country. So with all the right ingredients, the outlook for the steel industry in the medium term looks very bright, and the steel industry is bullish on this factor. In terms of risk and other things, obviously geopolitical issues, the raw materials, coking coal, and as you rightly pointed out, have been fluctuating, and there are obviously these are periodic issues which steel is a very interesting industry. We have used to these volatility, which generally is for a quarter or so, which we can I think with the larger players and most of the industry have got used to it, and can have experience in overcoming these sort of challenges which keep cropping up for this thing. But we are very bullish on the medium to long term, and are gearing up to meet this opportunity.
Sure. So we will now pause for the questions from the participants. I would request attendees to please key in their questions. So there is one question on the pricing outlook for steel, especially in the light of China dumping. So, Mr. Jayaraman, what would be your outlook on the steel price, especially in light of increasing imports?
I would say these are all short-term factors. We really can think there are when I joined the steel industry 30 years back, the textbooks used to, or the analysis used to say steel cycles are for 5 years to 6 years, up and down and everything. Now it is more like ECG, this thing where we see every 2-3 months up volatility keeps happening. So there are several factors which can cause variations in this thing. These are all short-term factors, and exports this thing. But I don't see that will have a very substantial impact over the long term, because as I mentioned earlier, China is an importer of iron ore and importer of coking coal. Large amount of, and 90% of iron ore and large part of coking coal. So obviously the cost of production of Indian steel producers are lower compared to Chinese producers. So long term, I think it is not a threat. And if on a purely economic basis, if trade happens, it is not seen as a threat. But in case of any dumping also, we definitely feel that the government will respond appropriately, and this thing. But otherwise, we see the margins of Indian steel producers have been healthy. All the companies have been focusing on cost control, have been working on various measures to become more efficient, and having the advantage of setting new plants compared to the older plants in Europe or Americas. The plants are much more efficient, and the new technologies in terms of larger size facilities are being set up. So this will also have a positive impact in terms of cost of production. So with the companies all focusing on improving their efficiencies and seeing how we can sing, and we don't see that it's not going to make a lot of difference in the medium to long term.
Sure. Next question is for Mr. Ranjan. What added precautions the company needs to take for fixed price contracts to safeguard against volatile steel prices? So.
See, this is a really tricky one. At one point of one side we are saying the raw material is very volatile in today's market. Yeah. And on the other side, what we are trying to say is how we can, be a safeguard against the long-term contract.
Long-term contracts.
So yes, it has to have some options where you can safeguard your company's interest. That if the index, it is known as index-based pricing, where you can have a flexibility, where if the index actually goes down, then you can actually safeguard yourself and your company. So it is now very common, and I think it is already prevalent in most of the companies to have a indexed, based long-term contracting. Yeah.
Okay. Right.
Pulkit, if you permit me to add just one more thing.
Sure. Sure.
Historically, what we have seen is the raw materials, steel making raw materials, basically the iron ore and coking coal, have had a close correlation with the finished steel prices. So if the general trend is if steel prices go up, the raw material prices go up, maybe with a small lead or lag. But it goes down, should vice versa should happen. So it is only the period of adjustments, which is generally a quarter or two, where there we'll see that adjustments in the the margins which could happen. But overall, they have a very close correlation, because coking coal is primarily used for steel making only. So the market does consider these factors, and iron ore is also directly going to steel production. So that is a natural, over the years we have seen this correlation happen.
Right. This is a debatable question actually. Do you foresee further safeguard duties being imposed by government on steel imports? Mr. Jayaraman, if
so we have actually seen export duty which has come up back in 2008 and 2022. We have seen import duty which has come up earlier, safeguard duty for 5 years. So I mean, should it be a 2-all, export as import, if we are looking at a safeguard duty going ahead?
I think what we can only say is that in 2015 we didn't have the mechanism for anti-dumping investigations. So the institutional framework for anti-dumping mechanism has been put in place. The DG, Director General of Investigations, have been set up, and we have now a very WTO compliant mechanism in place. and the government has been acting proactively. So it is something which, like any responsible country, we have a mechanism to protect the unfair dumping to happen. So this is a thing which I'm sure the government will use this prudently as and when required, if and when the dumping happens. So when it will be used is something anybody's guess, or this thing is that the volume of imports, is it something to trigger? That's a thing which government will analyze whether there has been a dumping which is happening. They will look at it, but we have a very formal mechanism to evaluate whether these things are happening, and see that it is domestic industry is not adversely affected by some unfair actions by the third countries.
So let us assume if it is a positive thing which is happening from the government front. But do you think with the kind of FTAs which we have, this will actually suffice the cause in terms of imports which are coming in? Because in the past we have seen, despite dumping duty, there has been imports which are happening either to the FTA route, or there has also been round tripping specifically from the Vietnam route. Your views on that?
I wouldn't specifically comment on that, but what we can only example is the last time in 2015-16 when dumping happened, when the anti-dumping measures were imposed. These were imposed on all the countries, including the investigation covered all the FTA countries also. And if there was this thing, and the anti-dumping measures were minimum import price was fixed for this thing which happened in 2015-16. So we cannot really predict what will happen, and in the future, and what will be the the measures which will be taken. It is something which is, we can only look back and see what the government. But we are very happy that government has been very proactive and reviewing the situation and acting promptly in case of need. So that gives us a lot of confidence to, as an industry, we believe that government is a supportive government in terms of proactively assessing both the requests. Obviously, there is a side relating to the end user industry. So the government looks at all sides and acts in a balanced manner and to protect the interests of the country. So that is something, mechanism is in place, and I'm sure that will give a sense of relief to the producers.
Right. So this will be the last question we'll take due to paucity of time. Mr. Ranjan, I think you will be able to answer. Do you see any labor issues in the steel industry post-COVID scenario, and especially with the kind of capacities which are coming up? Do you foresee that there would be a labor shortage in the steel industry?
The answer is no, I don't see any shortage. However, there is a caveat, because when there is a requirement of skilled labor, then there is always pull from other neighbors, and you can't just stop this migration from going a skilled labor from one company to the other company. And that will pose a challenge, how to retain a talent, and how to reduce the attrition rate in all the companies. Now it will be going to be a challenge for all the companies. But yes, having said that, India will have a strong labor availability here, whether it is skilled, whether it is unskilled. But definitely the real challenge will be there to retain the skilled labor there. Yeah.
Right. Thank you, Mr. Jayaraman and Mr. Ranjan, for your insightful views. It was a privilege to host you. I will now hand over to Divya to give concluding remarks.
Thank you, Pulkit, for moderating the session, and Hitesh for your presentation.
Thank you.
Once again, thanking all our guest speakers for their insightful views. It was a privilege to host you. And lastly, thank you to all the participants for taking the time out and being a part of this CareEdge webinar. For any further queries, feedback, or suggestion, please write to us in the feedback mail. Goodbye for now, and I request the tech team to kindly log off.